Having good credit opens up doors in your life that you could have never thought possible, from savings on your car insurance to making it cheaper to borrow money to own the home of your dreams. Thanks for stopping by the channel today. My name is Isaac, your personal finance nurse, and I make personal finance understandable to anyone. Today, I'm going to change your credit score for the better in just 10 minutes with 7 easy steps. A good credit score can be equated to a bachelor's degree on a resume. You most definitely can live life with poor credit, but just like a bachelor's degree on a resume, a good credit score opens up more opportunities, from renting out your dream apartment to getting the lowest rates on your car insurance. Hey, if the information in this video sounds like something that can change your life, go ahead and give this video a like and subscribe to the channel if you haven't already. So without further ado, let's improve your credit score. So what is a credit score? A credit score is a number between 300 and 850 that indicates a person's credit worthiness. The credit score of a borrower enhances how he or she appears to potential lenders. It's based on information from your credit histories, including the number of accounts you have open, the total amount of debt you owe, and your repayment history, among other things. Lenders use credit ratings to determine the possibility of an applicant repaying a loan on time. The credit score model, which is used by financial institutions, was created by the Fair Isaac Corporation, often known as FICO. Several credit scoring systems exist, but the FICO score is by far the most used. Your credit score has a significant influence on your financial situation. It has a very substantial impact on whether or not a lender will extend credit to you. Subprime borrowers, for example, are those who have a credit score of less than 640. Lending institutions generally charge higher interest rates on subprime mortgages than on normal mortgages to compensate for taking on more risk. Borrowers with poor credit may also seek a reduced repayment period or a cosigner. A credit score of 700 or higher, on the other hand, is typically regarded as positive and may result in a borrower receiving a lower interest rate, which means that they will pay less in interest over the duration of their loan. A credit score of 800 or more is regarded as good, and these people are known as the credit elite. So what are the ways to improve your credit score? Now that you've learned what credit is and how the scoring system works, let's focus on the good stuff, and that is how we will get your credit score boosted. The first thing you should do is check your credit report. The 3 major national credit bureaus where you may get a copy of your credit report are Equifax, Experian, and TransUnion. Once a year, you may do so for free on the official annualcreditreport.com website. After that, examine each report to see what is assisting or hurting your score. A better credit score is the result of a history of on-time payments, low credit card balances, a mix of credit card and loan accounts, older credit accounts, and a few queries for a new credit. Late or missed payments, excessive credit card balances, collections, and judgments can all affect your credit score negatively. FICO credit scores are utilized by more than 90% of major lenders and are based on 5 primary factors: payment history, which is 35%, credit usage 30%, age of credit account 10%, credit mix 10%, and new credit inquiries 10%. As you can see, payment history has the greatest influence on credit score, so make sure you don't make any late payments. It no longer matters if the sum is small or large. All that matters now is that you repay all the money that you owe. Creating a digital or paper file system that alerts you when a payment is due is an easy method to stay on top of your payments. You may also utilize applications on your phone to receive notifications when the due date approaches. If this doesn't work, consider automating these payments through your bank account. This also means that you should catch up on past due amounts. Bringing your bills current might assist you if you're behind on them. While late payment might stay on your credit record for up to 7 years, keeping all of your accounts up to date will help you improve your credit ratings. It also prevents subsequent late payments from being recorded on your credit report, as well as late fees. Talking to a credit counselor and enrolling in a debt management plan might be a useful alternative for people struggling with credit card debt. The counselor may be able to negotiate cheaper payments and interest rates with card issuers, as well as bring up your accounts to date. Now, mistakes always happen, and it's likely that a mistake on your credit report is negatively affecting your credit score. You should make getting this issue addressed a top priority. Each of these 3 major credit agencies is mandated to offer you a free report, as I said before. Request them from annualcreditreport.com, then double check for mistakes like late payments when you paid on time, someone else's credit activity mixed in with yours, or negative information that's too old to be listed. You should then challenge the errors after you have identified them. It will take some time to go over all of your reports and financials, but if you are accurate and the credit reporting agencies made a mistake, the adjustment will improve your credit score. The most foolproof way to prevent mistakes or have unauthorized unauthorized purchases, cloud your credit report is to regularly review your bank statements and any charges to your credit card. Now, when you apply for a new credit card, the credit card company looks into your credit history. Your credit score may or may not be affected by this inquiry. Inquiries into your credit history are now divided into two categories: hard and soft inquiries. Soft inquiries include things like checking your own credit, enabling a potential employer to check your credit, checks from financial institutions with whom you already do business, and credit card companies evaluating your file to determine if they wish to give you a pre-approved credit offer. Soft queries have no effect on your credit score. Hard inquiries, on the other hand, function a bit differently. They have the potential to have a long-term impact on your credit score, and hard inquiries might occur from applications from a new credit card, a mortgage, an auto loan, or any other sort of new credit. Now, a significant number of them in a short period of time, on the other hand, might have a negative influence on your credit score. Banks may view this as a request for money owing to financial difficulties, putting you at a higher risk. If you're attempting to improve your credit score, don't apply for new credit for a while. Lenders look for a variety of accounts in your credit report to determine that you can manage different sorts of credit. Installment loans, for which you can pay a certain amount each month, and revolving credit, which has a credit limit that you can charge up to, are two examples, as is the case with credit cards and home equity lines of credit. If you just have one sort of credit, diversifying your credit mix might help you enhance your credit mix. However, because your credit mix factors for just 10% of your FICO score, don't apply for credit only to raise your score. This may put you in danger of incurring debt that you can't repay. One way to add to the mix is to add rent payments to your credit report. If you pay your rent on time on a regular basis, include those payments on your credit report to increase the quantity of good information sent to credit agencies. Signing up for a service like RentTrack is one way to do so. Getting your landlord or property management firm on board may often help you save money on fees. Now, you might be asking why we encourage using these types of cards when the interest rate on them is generally rather high. Well, for starters, you only receive a secured credit card when you make a bank deposit in the bank and are given a credit card with a limit that is equivalent to the deposit. So long as you make all of your payments on time, you'll be able to increase your credit rating quickly. It may take some time to notice the benefits. Now, keep in mind that the aim here isn't just to get a card, though that might help you to improve your credit score by increasing your credit depth. The primary goal was to establish a track record of maintaining low balances and paying payments on time. The reason why we recommend this method is that when you are given a limit that you cannot exceed, you are more careful of the way you spend your money. This means that you are less likely to make bad financial decisions and take on debt, which allows you to escape the debt trap. The last step applies to those of you with either bad credit or those who are younger. Request to be added as an authorized user to a credit card account with a large credit limit and an excellent history of on-time payments if a family or acquaintance has one. As a result, the account will appear on your credit report and its credit limit may be beneficial to your use. Authorized user status, often known as credit piggybacking, permits you to profit from the principal user's good payment history. For your credit to improve, the account holder does not have to let you use the card or even give you the account number. To get the best results, make sure the account reports to all three main credit agencies: Equifax, Experian, and TransUnion. Most credit cards usually do. Well, this has a high potential to impact your credit score, especially if you're using credit cards for the first time. However, it will be less efficient for people who already have established credit and are trying to offset some mistakes they made or lower their credit utilization. Oh, in regard to credit utilization, after payment history, it's the second most important component in FICO credit score computations. The simplest approach to keep your credit usage under control is to pay off all your credit card bills in full each month. However, if you're unable to do so, the next best option is to maintain your total outstanding debt at 30% or less of your overall credit limit. From here, you may work on lowering it to roughly 10% or less. This is said to be the best way to raise your credit score. Requesting a credit limit increase is another strategy to enhance your credit usage percentage. Raising your limit will allow you more room to handle your affairs, and it may work out nicely for you if your balance does not rise at the same time. A meaningful change in your credit score usually takes at least 3 to 6 months of excellent credit conduct. Unless the unfavorable information on your credit report was a little blip, such as being late with bill payments 1 month, it's challenging to make a change much faster. While it's hard to place a time limit on credit restoration, it's reasonable to assume that the less bad information on your record, late payments, maxed out credit cards, frequent credit card applications, bankruptcy, and so on, the easier it is to restore your credit score. Your credit score may suffer as a result of your errors, and you may be denied a loan. Although there are lenders who give loans to those with terrible credit, borrowing with them might cost hundreds or thousands of dollars due to higher interest rates. A bad credit score may make renting an apartment, setting up utilities, and even finding a job difficult. If you are late with just one payment, you will not lose nearly as many points as if you're delinquent for several months and your account has been turned over to a collection agency. The second scenario is significantly more serious than the first, and your score will reflect this. So I hope this video helped you understand not only the credit score and how important it is, but also how to boost your score. If you found this video helpful, please leave a like and consider subscribing to the channel. I look forward to seeing you in the next video. Peace.